Good day, students. So I hope everyone is safe and secure. So in continuation of our lesson, in this video lecture, I'm going to discuss the cash flow management. Okay, so my name is Michael Victor Gonzalez, and I'm your instructor in financial management in Agribusiness Enterprise. Okay, so our topics are the following. So we were going to discuss first the cash flow statement. And second is monitoring of cash flow performance and end of year cash flow statement. And the last topic is cash flow budget, which consists of preparation of the cash flow budget and budget revision. Okay, so let's proceed in our lecture proper. So, cash flow statement is an important financial document that will track the flow of cash in and out of a business over a specific period. So, in the context of agribusiness, which involves a various agricultural activities such as farming, livestock production, and the sale of agricultural products, a cash flow statement is crucial for monitoring and managing the financial health of the operation. And here's how a cash flow statement can be structured and what is typically includes in agribusiness. So number one is the operating activities. So your cash inflow are includes the cash that you have received from core farming and agribusiness operations. So it comprises revenues from sale of agricultural products such as crops or livestock. And, and your cash outflow are expenses related to your day-to-day operation, such as purchasing seeds, fertilizer, pesticides, feed, labor cost, and maintenance are listed here. Okay. Next is your investing activities. So your cash inflow are any cash received from the sale of assets such as land, equipment, or machinery. And cash outflow are expenditures for acquiring new assets, expanding the farm, and making improvements to existing assets. This can include the purchase of land, your tractor, your irrigation system, or other capital investments. So, all of this are included in your investing activities. Next is financing activities. So, in cash inflow are any cash that you receive from your loans, grants, or investments made in the agribusiness. And also, your cash outflows are payments of principal and interest on loans, dividends to investors or owners, and other financing related expenses. So, your net cash flow will this section will calculate the net cash flow, which is the difference between your total cash inflows and your total cash outflows from operating, investing, and financing activities. So, beginning cash balance is the balance at the beginning of the reporting period. Okay, so if you can see in the example, and your ending cash balance is a cash balance at the end of the reporting period, which is calculated by adding the net cash flow to the beginning cash flow. So that will give you a what we call a ending cash balance. And if you have other additional details or explanation that can be added into your supplementary information so that it will be included to provide a context or clarify a certain transactions or events such as a major change in working capital, debt restructuring, or a significant investments. So Remember, class, that you need to have a well structured cash flow statement so that you will have a what we call this to assess the liquidity of your agribusiness. A, and also, it will give you a plan for your future expenses, make informed decisions regarding asset purchases, and secure a financing when needed. It also helps in identifying a potential cash flow problems and finding ways to address this problem to ensure the sustainability and profitability of the agribusiness. Additionally, it can be a valuable tool for reporting to investors, lenders, and your stakeholders who want to understand the financial performance and the stability of the agricultural operation. Okay, next is monitoring your cash flow performance. So we need to understand, class, that monitoring our cash flow performance is crucial in agribusiness as it helps ensure the financial stability and sustainability of your operations. That is why you need to monitor. And effective cash flow management allows you to pay your bills on time and invest in your farm or agribusiness and weather unexpected financial challenges. So, here are some key steps and considerations for monitoring our cash flow performance in agribusiness. Number one is that you need to create a cash flow statement. So, this class is the start by creating a cash flow statement which outlines all of your cash inflows and outflows over a specific period of time, typically on a monthly or quarterly basis. So these statements should include your cash inflow, which are the sales, revenue, government subsidies, loans, and any other sources of cash. While your cash outflow, as was what we discussed earlier, are your operating expenses like seeds, fertilizers, labor, your maintenance, your debt payment, and any other expenses that makes you your money get will go out from your operation. Okay. Next class is budgeting and forecasting. So develop a detailed budget for your agribusiness, projecting expected revenue and expenses for the upcoming year. And this will serve as a baseline for your cash flow projection. So regularly, class, update your budget and cash flow forecast to reflect a changing market conditions, input costs, and other variables that affect your business. Because prices or marketing trends are updating, so you need to also to regularly update your budget and cash flow forecast in order for you to have a updated analysis and also for the basis of your decision making. Okay, next class is track your actual or your projected cash flow. So regularly, class, you need to compare your actual cash flows to your budget and forecast. So you need to identify any variance or variances if there is any changes. And as you compare it, you investigate the reason behind of these changes. Okay, and by that investigation, if you have information available, adjust your budget and your business strategy as needed based on this comparison so that in order for you to keep updated and at the same time to keep on track of the trends and the recent market changes. So this is because this is very important that you will be able to cope up with the competition in the market. Next class is manage your receivables and payables. So your receivables are money that owed to you, something that someone has a obligation to pay you, and your accounts payable, which is the money that you uh, obligation pay. It's the amount of money that you borrowed to someone, and you have a timetable and the amount that you need to settle on the right date and the right time. Okay, so ensure that you are collecting payments promptly and that you're paying your bills on time to avoid late fees or damage relationships. So, class, um, in business, your relationship is one of your asset. It is intangible asset. You know why? Because that is your sustainability in your business. So if your relationship with your partners or other people will damage, it will cost a it will cost the future transaction, and with that, it is a potential for loss in your operation. So that's why, class, you need to manage this receivables and payables in order for you to keep your business sustainable. And next, class, is the inventory management. So keep a close eye on your inventory levels. So excess inventory ties up cash, while insufficient inventory can lead to lost sales. So find the right balance to optimize your cash flow. So this one, class, is very important because what is in your inventory is something that will give you a potential of your earning. And if you will not manage it properly, you may be able to mislook the important items in your business, and with that, it might be a lost sale. So that's why you need to keep a um, closely monitor this area. Next, class, is emergency fund. Emergency fund is a fund or a reserve to cover a what we call unexpected expense or periods of low revenue. So in business, especially in agribusiness, we're dealing with seasonality in agricultural commodities and agricultural products. So there will be times of weather conditions or uncertainties that will lower down our output. So having a financial cushion can prevent you from going into debt during these tough times. So you have this amount of money that you allotted for your emergency purposes, so that in case of these scenarios, you have something in your savings to use to get back in operation. Next, class, is loan management. If you have loans, you need to carefully manage your loan repayment and interest payments. So this one, class, you need to ensure that they align with your cash flow projections, and you're not overextending your borrowing capacity, because if that happens, it will be very difficult and having a stress in mind to settle it monthly. Next, class, is diversifying your income source. So in agriculture industry, especially in our field, no, in agribusiness, we have a lot of potential to expand our operation. So you need to consider diversifying your income, the sources of your production. In addition to selling crops or livestock, you may also explore other opportunities like agritourism, if you have that potential. Also, a value added products that you can also try to explore to process your own commodity into something that can provide a higher value, or government subsidies. So these are some other good source of uh, income that can give a revenue in your operation. Next, class, is risk management. So risk management, class, is that you implement this strategy by mitigating what we call the risk, no? Such as insurance coverage for your crops losses or natural disasters. This can help protect your cash flow in the face of unforeseen challenge. And because you don't know when these things happen, so if you have this risk management, So somehow it will give you a assurance that if something happens that beyond our control, you still can get back to your operation and can continue in your business activities. And also class your regular monitoring and adjustment. Continuously monitor your cash flow performance and be prepared to make adjustments. So why you should be prepared in in various adjustments? You know why, class? Because our industry are volatile. The prices changes anytime, any season, because there are a lot of factors. So that's why you need to really have a uh, having that flexibility to make adjustments to your budget and for your financial plans as these circumstances change. And this may involve reducing your expenses or exploring your, new income streams so that you can also weigh if how this uh, changes can help or this uh, reduce the impact in your operation. Okay, next class is the as part of your monitoring of your cash flow performance is that you may invest in technology. So utilize this available agricultural technology and software solutions that can help you manage your farm more efficiently. So these tools can provide a real-time data on crop health, inventory levels, and financial performance. And also class, consult with your financial experts. Consider working with financial advisors or accountant who have experience in agribusiness because they can offer you a valuable insights and these insights will help you to make and informed financial decisions. Next class are the government programs and subsidies. So being stay informed about our government programs and subsidies will help you and what are the available in agribusiness. This can provide financial support during challenging times. So here class in Department of Budget and Management, they releases 8 billion cash allocation to aid over 1.5 million rice farmers during the year of 2022. So it really helps our farmers to cope up with the difficulty in our rice industry. And also, class, having a long-term planning uh, is also important. While monitoring your short-term cash flow is essential, also to engage in your long-term financial planning is this will ensure that that your sustainability and your growth of your agribusiness will continue. So here, class, we have it's like a cycle, having a long-term planning. First, having a business plan. What operation are you in agribusiness? So by setting your goals, you set up your cash flow by monitoring them and setting insurance coverage in your crops or in your livestock so that you are covered in terms of during uncertainties and also your tax planning as well as your retirement plan or retirement planning and investments and in your estate planning and it goes back again in your business planning. So this is a cycle and these things are in wider consideration in a long term perspective because you cannot attain all of this in one setting or in 1 year, but it is a progressive outlook in your overall plan. So remember that cash flow management in agribusiness can be complex due to various factors like weather, market fluctuation, and regulatory changes. So I advise you, class, that being proactive and staying informed and having a well structured financial plan are key to maintaining a healthy cash flow in agribusiness. Okay, class, next is end of year